morning, everybody. I apologize. Running a little bit late here. We had internet issues, believe it or not. So I was freaking out, man. I didn't think I was going to get on here, but it's working now. So we're here. So if you lose me, that's probably what's going on. I don't know, man. Ever since I moved here, this place, more internet issues than I've ever seen before. So anyway, hopefully you guys are doing all right here. It is, what is it? It's Friday, the 2nd of January. I have to think about that, 2nd of January, 2026. And so what I've got are some really great levels for you guys to watch as far as macro. I know there's a lot of discussion out there, especially when it comes to Bitcoin and now silver and gold about, oh my God, it's the top, or the top's already been in and we got nothing but a down year and all these other things. And, I'm going to give you some levels to watch that are going to make things seem a lot more clear. All right. So that's what we've got today. I'm going to do, I've got Bitcoin, I've got Ethereum, I've got, I think I've got the NDX and the S&P, I've got gold and silver. I've got, I think I said Ethereum. I've got Link, I've got XRP, I've got Solana. Let me see here. See Solana, Ethereum, natural gas. I might even have oil here as well to take a look at. So, a lot of different charts here, going through a lot of the overall thing. Because what, guys? We've been in this, if you think about it, we've been in this this bull market, right? For equities since March of 2009, when they bottomed out after the great financial crisis, right? So we've been in this continual bull market since then. We've had some slight pullbacks along the way. We had the shortest ever bear market in 2020 there with I believe it was 2020, right? With what was it, COVID? We had this sharp drop down and then a sharp rebound after that. But as far as that goes, continually, right? We've also had all the Bitcoin's the big one, right? Bitcoin, well, for a lot of y'all, Bitcoin's the big one, right? Because what happened last year, I say last year, but for this entire cycle, the move for Bitcoin has been different than it's ever been, right? And we're always wary to say in markets that this time is different, okay? We're always confused to say that because I say confused there. We're always wary to say that because most of the time it's not, right? But every once in a while, things do move different in markets, right? And so something I've been talking about for a few years now was the change with the markets since COVID, right? Even really before then a little bit, but really since COVID. And you go, oh, well, you printed all this money. Well, it wasn't just about they printed all this money, but from 2019 moving into COVID and then moving forward, the Fed has changed the way in which it reacts, right? And so basically we're at this point now where anytime there's any kind of pullback, significant pullback or leading toward that way, we expect the Fed to inject liquidity into the markets, right? Fed becomes the backstop. And that's what's happened. That is fundamentally different from everything that's ever happened prior to COVID. The Fed has a lot more tools it uses now. Not that I'm saying the Fed controls the markets, right? But what I'm saying is that markets are going to be effectively a bit different now. Now, does that mean that the top is not in for Bitcoin? Well, we can't promise you that. But what I can say as far as a macro picture looks is what we're going to talk about today when it comes to that. And so you might see this, you might look at this and go, well, crap, everybody's saying that the top is in, and of course, again, Bitcoin last year being different, right? The whole move here being different. It's been measured moves up, which is, again, as I've explained, is going to be different because that's what happens when an asset goes from a fringe kind of, off to the side kind of thing to gaining Wall Street, Main Street kind of interest, right? Because then Wall Street gets in and institutions get in and they start putting a floor in and price starts moving up less spastically, right? We stop getting, all these continual blow off tops and it starts moving up more measured and it pulls back and it finds that floor, rallies up higher, pulls back, finds a higher floor, right? So, you can look at this whole Bitcoin bull market, from just a few years back And you'll see basically it's running within a channel. Okay. And so, that's different than what it's ever been before. What else is different? We hit a new all-time high before the halving this last time, which is different than every other time before, right? So you can sit there and say, oh, well, this time's not going to be different, but, we are seeing things that have been different than every other time. Now, granted, with Bitcoin, it's only really a few cycles we have, right? So statistically, there's not a lot to go off of. And you want to be careful with it, because a lot of the stuff I see online, guys, is people going up there and saying, oh, well, this one time or this last time price action looked like this. And it's looking kind of like that now, so we're going to do that this time. And you can jump on that and just believe that's all there is to it, and, most of the time lose money. Or you can kind of take a look at the overall picture of what's going on there. Okay. Real quick here before I go any further, Fibbo will be with me next week. He's got he's coming back into work today, and he is busy. I think he's in the audience here for now, but he couldn't actually make the show itself. So, but I believe he's going to be here next Friday, and he's doing a 16-part series in the market breakdown every Friday for the next 16 weeks. He's going to have a part of that series in there. So make sure you guys sign up at themarketbreakdown.com. It's free. Usually I do it every day. The last few months have been a bit more not as every day because we're dealing with some family stuff here. If you're in TWC, you know what I'm talking about. And hopefully that'll turn out all for the best. But it's been a bit more difficult. And then the holidays coming up here and all that for me to keep it out every day. But I'm going to try and push that back to every day here. But it will be out tonight. And of course, you'll get the first part of Fibbo's 16-part series here today. So, just giving you a way to look at what's going on with the market, outside of just price movement, right? I think a lot of people get really hung up on price movement, and that's all that matters. And you can do a lot with just price. I mean, you can do a lot if you understand how to read what's going on. But you'll do even better with that price if you understand the what do you want to call it there? The psychology and the emotion behind that movement, right? Everybody's going to tell you, oh God, well, most of the market is algos now, so human emotion doesn't mean anything. No, it means absolutely everything. It means absolutely everything. The algos are based on things related to the human emotion of where price goes. Okay. So, if you don't understand that, it's going to be a lot tougher to trade. But if you do understand that, then you'll stop watching things like, I don't know, got these big influencers on here, with everybody's pulling up the Wyckoff schematic, right? And they're like, look, price action's following. Guys, listen, if you see somebody doing that, they're not actually doing a volume and price action analysis. If they're just putting a schematic up there, stop following them. They don't know what they're talking. It's not, this is what price is going to do. It's saying, listen, if you're learning Wyckoff, these schematics teach you the phases and the labels of a generic kind of movement of price action. Sometimes it may look kind of like this, and sometimes it may look kind of like this for distribution. Other times it may look kind of like this with accumulation, looking almost exactly the same. It's the price action plus volume analysis that makes it Wyckoff, not just price action, guys. Wyckoff is not a pattern matching thing. But these idiots are out there going on with it. And you know what? If you go up there and you tell them, hey, listen, you're not doing this correctly. You're using a schematic for something it's not meant to be used for. And they get all butthurt. Oh, but look, it followed it. It's doing what it says, what it says it's going to do. I can draw lines on a page and put it up there and find one point at which price does that same or pretty similar thing and go, look, I know what I'm talking about. No, you're just dumb. And I'm going to say that here, guys, because y'all are getting suckered into the nonsense. Just stop. If you see somebody up there talking 30 different ways to look at price action, understand that they don't know what they're talking about. They're just trying to get engagement. And that's why most of the time they're wrong. The few times they get it right, they're lucky. You gotta be wary of these guys out there, guys. You absolutely have to, because your ability to make money in the market is going to depend on you. Not listening to them doesn't guarantee you're going to make money, but it's going to guarantee you have a better chance of making money. Oh, but Chris, they were right this one time or this last time. Yeah, there was one time. So what? I've got this thing, right? Something I've been talking about lately, which is this idea that markets are systems, right? But most, especially retail market participants, they're trying to trade the symptoms, right? So markets are systems. And once you understand that, once you acknowledge that and you accept that, and you start looking at them that way, life becomes a lot less difficult as a trader. I'm not going to say it becomes, easy. Trading is simple. It's not easy. It's not easy, guys. It's not easy because you're constantly going to be fighting against your own emotions and your own psychology and these things that are going to keep you from doing the things you need to do. Okay? So, do what you're going to do with this information. Some of you guys are going to listen to this and go, oh, whatever. Do what you need. I've been doing this going on 31 years now. You're not going to do that if you don't figure this out. Most of these people you're seeing online, these big accounts that you're following that are supposedly telling you how to trade, whatever, and you're going to notice that they continue to disappear. So many of them have disappeared since 2017, January 2017, when I started looking at crypto consistently. So many of them. And they're going to keep doing that. And you get your new guys every once in a while, like James Wynn, right? I see Bernardo's in there joking around about it, but they're out there for engagement, for entertainment, but a lot of y'all are going to follow them thinking they know what they're talking about, right? And they really don't. And real traders that have been out there for decades are going to say, listen, this person's a fool. Stop following them. They don't know what this sounds like. It makes sense, but it really doesn't. But most of y'all aren't going to stop following them because you're in there for those dopamine hits. If you're trading should be boring. You shouldn't be getting overly excited or overly upset. But that's when we go back to the idea that markets are systems. Your trading needs to be a system. Needs to be rooted in proper risk management, number one, right? If you're not doing that, you have little chance of ever being any kind of real success as a trader. That's real talk. And I say that, and most of y'all turn me off when I say that because it's not what you want to hear. Y'all are out there looking for people to tell you what you want to hear. Well, that's most of crypto Twitter. That's most of social media. Good luck. You need to follow people that tell you what you need to hear, especially if it's different than what you want to hear. Because most of what you come in thinking about markets and trading is what everybody thinks about markets and trading to some degree when they first come in. And everybody's wrong, right? You have to get beyond that if you want to be successful. Again, do with this information what you want. I've been doing it, almost 31 years. I know Fibbo's been doing it for 25, 30 years professionally. He says the same things. And so, you can either choose to listen to people that are actually doing this successfully for long periods of time, or, you can get caught up in the dopamine hits and people telling you what you want to hear that are good at marketing. They're good at talking. They're good at being loud, but they're not very good at actually trading or understanding markets. All right. So with that all said, I guess we'll go ahead and jump in here. We'll look at some charts, and this should get interesting. But what we're going to do is we're going to start taking a macro look at these charts. Why? Because guess what? The new yearly pivots had come out. And, of course, the new monthly pivots as well. And they're really setting up some interesting looks at the charts, at the markets here, that you are often, many of y'all probably are not going to be ready or willing to listen to. Okay? Nothing of what I'm going to tell you here is going to tell you that price has to do something. I'm going to show you these levels, and I'm going to say if price does this, then likely this. If it does this other thing, then likely this other thing. because that's the way it most often happens. Now, there are no guarantees in trading, folks, other than you will lose money from time to time as a trader. And the newer you are, the more money you're going to lose and the more often you're going to lose it. That's the only guarantee in trading. If anybody is trying to blow anything else up your rear end, walk away. Actually, you know what? Run away. Run fast. Don't even just leave them, block them. Okay? So let's jump on in here and talk about some charts here. Let me see if I can pull this up. Oh, I got to do the different. All right. Can you all see those chart? Can you all see the chart there? Just let me know then. Real quick, and then I'll jump on it just in case you can't see it. Somebody tell me. Tell me you can see the chart. Or tell me you can't see it, something. Nobody? Are y'all even hearing me? Oh, you can see it. Okay, good. Y'all had me freaked out there for a minute. I know you're a little bit behind me, but oh my gosh. All right, thank y'all for letting me know. So here's the deal, guys. These are the monthly charts we're going to be looking at, all right? This is Bitcoin. Now, this is the Bitcoin all-time history index chart, okay? Now, everybody's telling you price definitely has to go down. It does not definitely have to go down, okay? Here's the thing. We are right here. Now, between November and December, we've got higher lows, and we happen to have lower lows on RSI here. The monthly has reset into oversold on the stochastic RSI, and this is the RSI, by the way, here, okay? You can see that we've got a capitulation type volume big candle coming off the all-time high there. Right into this support, which kind of itself finds support kind of at the very top there, right? So here's the thing. All you have to think about with Bitcoin is we are sitting on this Bitcoin all-time history chart. So whatever chart you're looking, if it's Binance, if it's Coinbase, if it's Bitcoin USD or Bitcoin USDT, the pivots will be slightly different, but they should be around the same. But on this chart, what you're looking at is the monthly pivot, or the yearly pivot here at $96,071. And the yearly S1 pivot at 65,923. That's all you really need to know here, guys. Here's what it means. If you get a weekly or a monthly candle, impulsive breakout and close above the yearly pivot here at $96,071.25, impulsive breakout and close, that means a big bodied candle, like you've got a large body here, got a largish body here, you got a large body here, right? So a large body through that and a spike of volume, okay? If you get that, you're all but guaranteed that this is the low and we're going to break out higher. And in that case, most likely we're going to get a run up to the R1, the yearly R1 pivot, about 117,700 area. Could go a little bit higher than that. And then a pullback probably to the yearly pivot here, again, down around that 96 to 100,000 area. And then you'll get your next breakout higher toward 150, 160,000 as the next move up. If we get a weekly or monthly candle impulsive breakout and close above that monthly pivot. Okay? Now, it's also possible we could get smaller candles breaking out above that. And if we do, we can continue to look up here toward this 117.7 as a target. But if we can get the impulsive breakout and close, that's going to make it a lot more likely, okay? It's the impulsiveness of that breakout and close above that pivot that gives us the likelihood that that low is in there. Now, here's the other thing. If we rally up into this area and we're getting rejected on the weekly or the monthly, and we're coming back down, odds are much higher that we're going to break down and probably target the yearly S1 pivot at 65,923, which, as you'll notice, is just a significant resistance area right here, right? Now, at that point, one of two things is going to happen. Either it's going to continue to break down here, or, well, three things could happen. We could break down here. We could reverse here, rally up toward this area, right? This 90 to 96,000 area, get rejected and break down further, or we're going to get this breakout up higher. So what are you looking for? If you want to be bullish, macro, for Bitcoin, you're looking first for an impulsive breakout and close on that weekly or monthly, candle above that monthly pivot or that yearly pivot right here with a, initial target of that 117.7. That, or you're looking for a rejection in this area, a breakdown to the S1 pivot, and then a rally back up and a breakout above the pivot. If we get rejected around this area up to the pivot from where we're at to the pivot area, and it breaks down to S1 pivot, and then it rallies and breaks out above the pivot, you're all but guaranteed that that's going to be the low there. And again, you're heading up there, beyond 150, 160 up there. Now, again, I said all but guaranteed, right? There is no guarantees. But generally speaking, this is how price action tends to work. And you can use this on any time frame. The 1 minute, the 15 minute, the 4 hour. I have probably just right there taught you one of the easiest concepts in terms of price action. No matter how much or how little you know about trading in markets, that will add a lot of positiveness to your understanding of markets. It's a specific setup that happens either that way with the breakout or the pullback to the S1 and then the breakout. And those are bullish. If it continues to move decisively lower below that S1 pivot, well, at that point, price is going to continue lower. Probably the S2 pivot, yearly S2 pivot is the next target there, around that 44,300 level. That really is the way to go, okay? You don't have to worry about all the small time. If you are asking about the macro price action for Bitcoin, this is all you really need to know. This is better than any moving averages. This is better than any kind of system that you're using to do it. Does it do that or does it do the other? That's all you need to watch. Now, this is all macro, right? So you can't be watching the 15-minute time frame trying to apply this. This is the macro. It's going to take time. You need the weekly candle or the monthly candle to impulsively break out and close, or to be rejected and fall down further, which then gives you that target, that S1. Now, there's going to be bounces and pullbacks along the way on the smaller time frames for either one of those. But as far as the macro looks, is the top end for Bitcoin or not? Well, if we go from where we're going right now and we impulsively break out and close on the weekly or monthly candle above that yearly pivot, the odds are high that the top is not in, but the pullback is likely complete. And again, from that point, most of the time, what you're going to get is a rally into the R1 pivot area, around that area there, and then a pullback down toward the pivot area, right? So in terms of Elliott wave, how does this work out? Well, generally speaking, this would give you a 1 and a 2, and you get a 3, 4, 5. So this would give you 5 waves up into that R1 pivot area. Could go a little bit above it. And you get 3 waves back. So a decline, a bounce, and further decline toward the pivot. So that would give you a 1 and then a 2, and then you get your breakout for 3. So that's just kind of adding some Elliott wave in there with the way that this price action generally tends to behave if it gets that breakout there. But again, the other part being, well, if it does not, if it gets rejected on the weekly or monthly candle around this area, right, and comes back down, well, then we would be looking down here toward, once we break down through that 86.19, we'd be looking for that 65.9 kind of target area, or close to it. It doesn't actually have to get all the way down. It could get me, maybe 69 here is pretty close, 70,000, right? Kind of get you right around this area right here. We could get that. But we're looking for, again, price action is never about exact levels. It's always about, okay, well, here's the area we're looking at, right? Here's the area we're looking at. Here's the area we're looking at. So you're looking for a pullback down toward this area and then a reversal and a rally back up. All right. So, again, you're going to look at everybody and their grandmother giving you all these reasons why price has to do A, B, or C. And none of it has to happen, right? Even what I'm telling you here, I keep telling you, right? It doesn't have to break out and go here. It doesn't have to come down here and bounce, right? It could continue lower. But generally speaking, if you get this series of movements, if you get the impulsive breakout and close above the pivot, price will generally tend to rally to the R1 pivot. And then from there, most of the time we'll pull back down toward the pivot. And from there, most of the time we'll end up rallying higher. And when it does that, usually, if you do Elliott wave, it's going to give you 5 waves up from the swing low to the R1 pivot area, 3 waves back toward the pivot area, and then your next move, break out higher for your wave 3. So that just happens to align with it. Again, what we teach at TWC is a lot of this. Here's how markets tend to move. And you can look at it with Wyckoff. And this is how Elliott wave plays with Wyckoff. And this is how price action within, what are we talking about here? Pivots aligns with what's going on with Elliott wave and what's going on with Wyckoff, right? Because they all give you understanding via liquidity, right? Again, trading is simple. It's not easy. It's simple because price just moves from liquidity to liquidity. Now, there's going to be people out there that are going to make liquidity a lot more difficult to understand. They're going to give it all these silly little names and 15 steps it has to go through. No, it's trading is not that difficult, guys. And the more difficult you make it, the more likely you are to lose money. Trading really is quite simple, but you have to understand what's going on, right? You have to accept that price action is basically a result of human beings, of their aversion to fear and their jumping toward greed, right? Of those two emotions, by the way, fear and greed, which are the two strongest emotions you have as a human being, fear is the largest. Fear is the strongest emotion you have. Don't ever forget that, whether it's trading or anything else, fear. We tend to do things out of fear more than anything else. Fear of missing out, fear of being hurt, fear of the unknown. It's always fear. It's fear what drives us to do the things that we do most. And it's no different in trading, okay? So this is Bitcoin. I just simplified it for you guys. It really is that simple. Just zoom out to the larger time frame. If you think or if you don't think, whatever you think, whether the top is in or not, this is your playbook. This is all you got to watch. Watch for these things to happen. If one of the two green lines happens, you're good to go. If the red line happens, the top's in, right? And you're just heading lower, and your next target's going to be that 40,000 and change area down there. Okay? Now, again, is there going to be price action along the way in the lower time frames? Of course. You can have, up and down price action along that way, right? So locally with Bitcoin, let's kind of zoom this into the daily here. Now, I posted this chart on Twitter. And I said there was the possibility that this could be a 1 here with an ABC, ABC, and 3, 4, and a 5 coming down with a target of the monthly S1 pivot here at 82,738. But I said in order for that to happen, because this wave 4 would be a triangle, right? It'd be A, B, C, D, and E. So we had to stay below wave C here, which was 90,332.98. We are currently hit a high here of 90,972.31. So this count is no longer valid. Now, the count I've had with our students at the Academy is what I'm looking at now. Okay? And that's going to say, let me kind of draw this up on here for you. This is what we've been watching basically off the swing low as it's developed here. Is the idea that we have 1, 2, 3, 4, and 5 as a leading diagonal. And what does that mean? Well, that means wave 2 likely would complete down here, which if we go into a pullback here, if we do a retracement of this, that swing low is right there at the 70.5. If you guys know me, if you've been following for any time, you know my favorite pullback, because it's what hits most often for a wave 2, is 70.5. It's an institutional level pullback. And there we go, hitting it, right? So I like that. So what does that mean here? Well, it means what's probably going on here is you have an A here, something like this, right? An A, a B, and a C down here. Now, people get caught up in these all the time, all this overlapping price action. They automatically assume it has to be a triangle. They don't go in there, they don't do the work, right? So the easiest way you can understand, if you see a lot of consolidating price action, lower highs, higher lows, you can assume, one, that it's a triangle. But if it breaks out higher here, most of the time it's a 1, 2, 1, 2, right? And so the idea would be that we would have basically a 1, 2 here. So this would no longer be a triangle, right? And I'm going to tell you what the significance of this is. You would likely have a 1 with a flat as a 2, and then, potentially a 1 and a 2 here. Okay. Let me see here. Where am I? 1, 2. There we go. So you're having interior price action playing out here. Nope. Got to get lower than that. Can I get down there? Let's see. Minuscule. Can we click it? Yeah, we're not clicking. Give me just 1 minute. I'm going to pull this up a little bit. Okay. So what you're talking about is this is 1, 2. And so of this 3 heading up here, this is 1 and 2 of that larger 3 here. Okay. So this is going to have to be micro because the other one's subminuet. And this right here would be submicro. And, most likely this would be what we're looking at here. And so we have 1, 2, and then 3 of wave 1, 2, 3 of wave 1, 2, 3. Now, the significance of this, and this is why it's such an awesome thing when you think it's a triangle like that and then it breaks out higher, is because, your second thought is, oh my God, this is just, think of a rubber band tightening up more and more, right? 1, 2, 1, 2. So this movement out here becomes 3 of 3 of 3, which means what? It means large movement. It usually means a lot of volume behind it. It usually means impulsiveness. And that's what we want to see, right? That's what we want to see. So that's what we're watching here, because if this is going to be a 1 and a 2 here, generally speaking, let me see here. Kind of getting this right there. There would be, 5 waves up around 94. What is that? 94,560 for this wave 3 minimum. Well, I mean, wave 5, I guess, actually minimum expected, because that wave 3 would be around 93,083. But we don't want to get really hung up in the waves 3 and 4 here, because the bigger picture is, where are these wave 5s headed? Right? Because that would give you a wave 5 there, which would then say, okay, well, we've got a 1 and a 2 here. Where should that wave 3 go? because this wave 5 is going to be of this circular wave 3, right? The circle wave 3 there. And so all of a sudden we start looking like this. See if I can get this down a little bit more there. All right. So this wave 3 is 94,312. This wave 5, which should be that circular wave, that circle wave 3, is 94,630. So it's about $318 above the wave 3 target. So that's a solid wave 3 target there. I would look at that for sure. Now here's the thing. We say that, right? So then you get your wave 4 pullback. And then you get your wave 5 on the breakout there. And you go, okay, well, if I'm going to do that, we're probably looking up here at around 96.4 and some change. Now, obviously, that's less than this wave 3 target, which is up here at 1029. So one of two things will happen here. If this count is correct, wave 3 here and or wave 3 here is going to overextend. They're going to head up higher. So this wave 3 could come up here to the, the 94,630 area or even higher. This wave 3 would then probably get up, closer toward this 99,000, 100,000 area, which would then see, this wave 5 then get up here. But this is where you kind of zoom out a bit. When you have all this overlapping potential energy build up for a big move higher, this is where people get caught. They look at the local targets rather than paying attention to the larger targets. Me, myself, here's the way I'm looking at this. We are above the monthly pivot. We're doing it. We've got a largish candle spread, right, compared to the candles nearby. And we're getting a spike of volume, right? The volume is greater than every day so far, other than this rejection here on Monday, December 29th. That volume is almost to that. And we've still got how many hours left today? We've still got another 6 or 7 hours left in the day. That's almost a quarter of the day still left. So that volume is going to continue up and likely get higher than that. So when I tell you that, when I talk about different time frames and we're looking for large candle spreads and, spike of volume, whether you're coming through it or you're starting right there on top, this is what we're looking for. We're looking to get these larger candles. Now, anything can still happen at the end of the day. This is the daily candle, guys. It has not closed yet. So anything can happen. All right. So don't assume that just because we're here, we're going to keep breaking up. We might, but remember, we are looking at the daily time frame here. So we have to, before we make any beliefs about what's going on here, we have to wait and see how that daily closes out. Some things that can happen here, we can get rejected again at the same area where everything else was rejected and pull on back toward the pivot. And if we do, that decreases a lot of this here. And at that point, we get concerned and we think, well, we might get a breakdown back down below it. And if we do, that increases the odds that we head down toward this 82,738 or a sweep of this 80,000 area, or the move further down, toward 74,000, 69,000, 65,000. Those would be the targets I'd be looking at the downside, right? The other possibility is we close like this and it looks good, decently, right? But we're still getting stuck here. My preferred way to get more excited about this, about the possibility that maybe that low is in there, is to see this candle continue breaking up and see it close somewhere up in here. Somewhere up above 91,000 to, maybe 93,000 at least. If we can do that, then it starts looking a lot more like, hey, maybe, just maybe, we might have that move down lower, right? So it's all in steps, right? This is about systems. This is about understanding where your invalidation and your validation levels are. That's what trading is. It's not about saying price is going here, period, end of sentence. But most of y'all, because, again, you don't have a lot of experience with markets. You don't have a lot of education as far as markets go, or you have the wrong kind of education, right? You don't focus on this area of it, which is the only part that really matters. You get caught up in the, oh, did they call the top or the bottom? Did they call a specific price level or not? That's what you get caught up in. But that right there, that mentality is where you're going to lose most of your money. Instead, when you think about trading as a system, this is what we teach day in and day out over at Texas West Capital, okay? When you treat it as a system, things become a lot more clear. You start trading what's happening versus what you think has to happen. Because here's the thing. As human beings, if we convince ourselves, and we often do in trading, that this thing or that thing necessarily must happen, we end up emotionally getting tied to that. And that's why we have trouble setting proper stop losses, or that's why we have trouble leaving our stop losses alone and not moving them down lower. That's why we have trouble getting out when we need to get out. When the market tells us, listen, we're wrong. You're going to be wrong a lot in trading. But being wrong a lot doesn't necessarily mean you're going to that you're going to consistently lose money. That you know, after a year, after 2 years, after 5 years, that you're not going to be making money consistently across that time. Because trading is not so much about your win rate, which is what everybody goes after. It's more about what is your risk-adjusted return. If you are making, on average, more money on your winners than you are on your losers, the greater that is, the more losers you can have and still be profitable. So if you make sure that all your losses are 1% or less of your account, right? Every time you lose, you will lose no more. You might lose less than that, but you'll never lose more than that because you set your stop losses so you don't lose more than 1%, right? Then guess what? If you're winning, if your average profit is just over 1%, you about break even. If your losses are 2%, your winners are 2% or greater, and your losses are always no more than 1%, then you can lose like 35%, or you can win like 35% and still be profitable. If you make sure your winners are at least 3% or 4%, and you keep your losses at 1% or less, the number of wins can continue to go down and you can still be profitable. The best thing you can do as a trader, the holy grail of trading, is to have more than a 50% win rate. So even a 50.1% win rate, while your average winner is greater than your average loser. If you can do that, if you can have anything over 50% as your win rate, which is secondary to making sure that your winners are always greater than your losers on average, right? There's no way you can't win as a trader overall. You're going to lose some trades along the way, but that's the secret sauce, guys. Stop listening to everybody else saying all these other things. That's all you have to know. So what does it mean? It means trading is about risk management. That's it. And I tell this all the time, and most people ignore me. Most retail traders ignore me because they don't want to believe that. It's boring to them. But that's how you stay in 5, 10, 20, 30 years plus. If you do anything other than that, yeah, you might have some wins here or there along the way. You might even have a series of wins. Everybody gets lucky every once in a while, right? But you're not going to stay profitable for 5 years or 10 years or 20 years or 30 years. There's no way. So if you have not until this point taken the position that trading is about risk management, and what you're really interested in is your risk-adjusted return, not your win rate, your risk-adjusted return. If you haven't been living those truths up to this point, this is your point right here. This is your day. This is your time. 2026 is your chance to finally be consistently profitable, because that's the basis of it. Now, there's obviously more things to learn about, understand price, right? So you can be more often correct than not, and then you get that holy grail of again a win rate over 50% while your average profit is greater than your average loss. You just see your account look like that, right? Now, doing these things aren't going to guarantee that you're going to make money consistently. Not doing them guarantees you won't, though. Does that make sense? Think about what I just said. Doing them does not guarantee that you're going to be a consistently successful profitable trader, right? But not doing them guarantees you won't be. Okay? Yeah, I'm going to Bitcoin Lord. Just watch what I'm saying here. I got gold coming up, man. I got it coming up. But I need to get this like into y'all's heads, because you're too busy out there watching the dopamine, watching the James wins, watching the Marty party, nonsense out there. You're too busy watching that nonsense. You think more information is better. You think the more ways they can show you why they're definitely have to be right, the more likely they're right. But it really is this. It is making sure your average winner is greater than your average loser. And from there, you have to have a system to do that. And from there, it's tweaking your system so your win rate goes up and up and up little bit by little bit. That's what it is. If you think it's about coming out here and winning 80% of the time, 90% of the time, God forbid, 100% of the time, you're going to lose everything you have. All right? Let's jump on some more charts here, guys. I know I've been talking a bit here, but it's just so important that you guys get that. This is Ethereum, y'all. This is Ethereum. Now, any other time on any other chart, if you had consolidation up into resistance, people online would be screaming that it has to go higher. Except for Ethereum. No, it stopped. It's done. Well, maybe. But again, let's look at the pivots. So the big thing is, okay, we've got a possible ascending triangle here going, right? So you're getting lower or higher lows up here, compressing price into this resistance. Now, if this is correct, we're going to get a strong push out. Okay. So what are we looking at? Well, we're looking right here. Here's your yearly pivot, $3,100, $2.50. If you get an impulsive weekly or monthly candle through that area, and we're trying to push through it right now, that's going to signal that most likely the low is in here and we're going up higher. Again, your initial target is going to be the R1 on the yearly here. That's right there around, what is that? 40, I got to get this out of the way here. 48.19, right around the all-time high here. So if you can get that move through there, that impulsive move through there, then most likely you're going to be targeting this area up here. If instead you get rejected around here, we start pulling back, well, there's a good chance we're going to come on down here toward 1250 or so. That yearly S1 pivot. Okay? It's a good chance that we're going to end up doing that. But that would be about where I would expect to go right now. And I would be looking for, again, a reversal off there and a rally back up through that 3,100 area to signal that most likely that's the low. We're headed up to, 7,000, 10,000, whatever, right? Here's the other thing. You can get a quick target. You guys can use this day in and day out. Use your fib retracement tool, not your fib extension tool, your fib retracement tool. Make sure you have the 1618 checked on there, okay? Measure out the widest part, the tallest part of your correction. The 1618 is your target. It's your pattern target. This says 13,800. It does, now remember, this is a pattern target. It does not have to get that high. But if you haven't broken out yet and you're looking for a potential target, because once you get the breakout, you're going to push up a bit higher here, and you should be looking at that area. And as it breaks out here, you can kind of come into a smaller time frame and decide if that still looks good, if it'll end up earlier, if it'll go out larger. You can do that, right? It's adjusting along the way, but that gives you an initial target. Okay? That gives you an initial target there. Now, here's one thing I look at. If I'm looking at this big picture, what do I notice here? Why do I think there's a good chance ultimately that we're going to break out higher? Now, we can still pull back here before we break out, but the first thing I'm looking at is on this pullback here, A, B, it's only 3 waves, folks. And it's only 3 waves, and it broke out above the second wave here. This is Elliott wave. 3 waves. This is corrective. If it's only 3, if it's not 5, if it doesn't go 1, 2, 3, 4, 5, if it only goes 3 and breaks out above that second wave, it's corrective. Okay? So ultimately, Ethereum should be heading higher. Now, does it do it from here or does it do it from down here? We'll have to wait and see. But ultimately, it should break out higher. Okay? So big macro picture here says, that's 3 there. We should ultimately be breaking out higher. So I want to watch what's going on right here. Let me get this back out of the way here. I want to watch what's going on with the pivot to see, can we start that move? Zoom it into the daily. What's going on with the daily? Kind of like Bitcoin. We're starting to get a large candle spread compared to, everything is relative, folks, okay? You just have to understand what it's relative toward, right? This is a lot of what I teach, starting with, with Wyckoff and then, the Wyckoff method, and then expanding that into just general price action volume analysis. But right here, it's always relative. Volume is always relative. It is never absolute. Say it. Write it down. Don't ever forget it. Okay? Don't ever forget it. Volume is always relative, but you just have to understand where it's relative to, right? So again, kind of like Bitcoin, what do we have here? 1, 2, 3, 4, potentially 5, right? So like Bitcoin, we potentially have off this November 21st swing low, we potentially have a leading diagonal, right? Now, what do we have from that? Well, we have A, B, C. So what does that mean? What I just showed you on the bigger time frame is also works on any other time frame, right? A, B, C. So if we break out above 3176.10, which we're almost there, right? If we break out above that, that's going to lock that in as corrective there. And if this is 5 waves up and this is 3 waves back, that is most likely a 1, 2. Now, it could be an A or a B, or an A and a B, and we can get a C, right? But this pullback right here so far is 78.6. Solid wave 2 pullback. And so we'll look at it this way. Put this up here, bring it down here, right? If this is going to be corrective here and just be an A, a B, and a C, it likely is going to target 3,600 to 3,800. Once it gets above the 1.236, your thinking should go from ABC to possibly 1, 2, 3 with that minimum expected wave 3 target at 41.18. Minimum expected wave 5 target at 44.36.5. Wave 5 gets you pretty close to this all-time high up here. Now, I said minimum expected wave 3 target. This can overextend. Wave 3 can overextend higher, which would push wave 5 up higher. But minimally, these are where we would target. And what are we doing to do that? Well, we're looking for a breakout above 31.7610. And again, if you're not convinced that the low is in here and you think maybe it's going to go lower, then what you would expect is to see a rejection somewhere between 3,600 and 3,800, which means what? It means you could potentially go long on a breakout above 31.7610 and target that area there. But again, once you're getting above that 1.236 extension of wave one, once you start getting above that, you start leaning toward the idea that it's a 1, 2, 3. It doesn't have to be. It could be an overextended wave C and just get there. But again, what have I told you guys? Nothing is guaranteed, right? Nothing is guaranteed in trading. But you're trying to put the probabilities in your favor. Okay? That's what it means to be a trader. It's about figuring out what your probabilities are and putting them in your favor. So locally here, first step is impulsive breakout and close of a daily candle above the monthly pivot at $3,044.30. We'll potentially have that. The volume is greater than all volume. Oh, geez. What is that? 21.94K? 22.09. We're almost, and again, we still have 6 or 7 hours left in the day, right? We're already at the volume down at this low here. So we're getting right now large candle spread comparative to the candles around it and large volume comparative to volumes around it as we're breaking through the monthly pivot. That's the first thing you want to see. That puts the probabilities that it's going to go up higher in your favor. Doesn't guarantee it, but puts them there, right? The probabilities are there. Again, we see this as potentially 5 waves up, 3 waves back. So either that's going to be an A and a B or a 1 and a 2 once we break out above that 31.76. So we look at our initial target area here. And if it keeps going up through there, we look at 41.19. And then we look up here at 44.36 because your wave 3 secondary target is generally going to be your 200% extension of wave 1. So again, it's all better to do that, right? What'd you say there, Colton? If you want to be better at trading just in general, you better join. Hey, I appreciate that, buddy. Yeah, Colton's in there, so he's going to tell you what's up. As far as what we do there. By the way, we've got one. I was going to close it down, but since I'm doing the live stream today, we've still got one. Nobody took it. We had a couple of them. Somebody took one. We've got one more half off our annual for the Liquidity Cartography group, which gets you everything I teach, as well as everything Fibbo teaches and his trades and everything as well. But use the code 50 OFF as one word, 50 off, and you will get 50 off your annual Liquidity Cartography subscription. So it's first come, first serve. If somebody can grab it, they want it, they can grab it. It's there. But, if you're serious about trading, honestly, guys, I work so hard to make sure we do the best thing that we can out here. And I don't think there's a better place for you to learn because we talk about market psychology. We talk about trader psychology all the time. We do live trading. Everything I teach is usable on the 15-second to the yearly plus time frames. I don't teach you a system that only works on a specific time frame, which means it doesn't matter who you are, what time you have, all these different things, right? Or what time you want to trade, what length time you want to trade, right? The concepts, the things I teach help you understand the market, how and why it moves the way it does. Where is liquidity and why? I don't just say it's there because it broke down through here, right? I teach you why liquidity is pulling there or where liquidity may show up in areas that haven't even been traded through yet and why they may show up there. But everything we teach revolves around that, right? We teach you Elliott Wave, we teach you Wyckoff, we teach you some of the more important areas, the more profitable areas of SMC, right? The ones that will help you without going into all the silly little labels and all the nonsense, right? We teach you all that, but we also teach you how it all works together and why. That's the goal. That's why it's called liquidity cartography. It's mapping out the liquidity flows on the chart. We're not talking about heat maps and that kind of silliness. We're talking about understanding what's going on with the market. So You can do that. Okay, guys? All right. So anyway, this is Ethereum. Again, potential good stuff happening here, but we'll see how it plays out, right? Understand that just because it's looking good at the moment doesn't mean it's going to close that way. Again, anything can happen. We can close back down below the pivot. And then that'll start looking really suspect, right? And what does that mean? Well, that means if we let's say at the end of the day, we break back down here, well, we'll see if the next few days we can get that impulsive breakout and close above, or if it gets rejected, continues lower, in which case we'll look at the monthly S1 pivot. It's right around the swing low here at 26.3870, right? And if it does that, well, again, we'll have to look here and go, okay, so what is going on here? Is this somehow, instead of 1, 2, 3, 4, 5, is it A, B, C, W, X, and then some sort of A, B, C, Y here? So it's 3 waves up. Because if it's going to break down lower, that would have to be most likely 3 waves up, or 3 waves up there. But when you have overlapping price action in the form of a potential leading diagonal or a potential triangle that breaks out here, right? Like we saw with Bitcoin, in either case, that overlapping price action should have you suspect until you get the movements, right? So again, first is here. Second is the breakout above 31.7610. Third would be the breakout above the swing high here. That would increase the odds significantly. This is 5 up and this is 3 down. Again, looking for your initial target to the 100 to 123.6. And moving through there, we start leaning toward a wave 3, 41.18 or maybe even 44.36. Or if it really just got some legs on it, it could even be higher than that, right? Because wave 3s can really extend. But we have to have a target to begin with. We have to have a general area where price tends to reach for, if it is that thing, if it's a B or a C or a 3 or whatever it is. Okay? So that's what we're looking for. There's Ethereum. Let's jump up here. XRP. Look at XRP. So what do we have on the bigger chart here? Well, we have a sweep of this low here. Okay? We have a sweep there. Now, big picture says this looks like ABC. This looks like ABC. So if you have an ABC that breaks up above your swing high, unless you're in an ending diagonal, which we're not because we've got this large wave 3 here, it looks like. Big candle, big spike of volume. So that 3 waves instead of 5 pushing out above swing high is going to suggest that most likely this is going to be a flat correction. And so that means we're looking at something like this here. So you have 3 down for A, you have 3 up for B, and then you have 3 or 5 down for C. Now, if you just get 3 down, right, which we did, we got the sweep below here, well, that becomes an A, or I'm sorry, if it's just 3 down, that becomes 3 down for W, 3 up for X, and 3 down for Y. Okay? If this breaks down and drops below this October 1st swing low here, then we go 1, 2, 3, 4, 5. Now, on the monthly, this suggests that a breakdown below this swing low at $1.58 could see price targeting the S1 pivot here, or that area, right? And this is the XRP USD Bitstamp chart. So whatever chart you're looking at, you just want to go up into your indicators, metrics and strategies here, and type in pivot point, and then get your pivot points traditional or pivot point standard. I'm sorry. Click on pivot point standard, and that'll bring these up, and that'll show the pivots on every time frame, the correct pivots, right? So you want to zoom out to your monthly, and you go, okay, well, if we're losing this low here, there's a good chance we may come all the way down here toward this $1.05 area. But we could be done, WXY here. And so we're going to watch this, because if we hold this low at $1.58 and instead we get an impulsive weekly or monthly candle breakout above the yearly pivot here, at 2.36175 on this chart, that is going to signal that the low is likely in here. And then we would look higher. And of course, our initial target, local target, would be the R1 pivot on the yearly at $3.14, basically. Right around that all-time high, right? Based on the height of this pullback, we would have a pattern target like I did with Ethereum, right? Of up here around $6.19, which, by the way, would also just about run you through the yearly pivots. So here's another thing about pivots. I'm giving you guys so much free, amazing information. Most of the time, if you're getting up here around the R4 pivot or so, R3 pivot above that, you're going to go to the R4 or just beyond the R5. And when you run the pivots before they change, usually that indicates a reversal coming in. So if this were to get up here around that 619, I would be looking, and from right now, I would be expecting a reversal around this area up to, maybe $7 here. Now it could go higher, but generally speaking, I'd be looking for a rejection in this area and a pullback afterward. But remember, again, this is the yearly pivot. This is 12 months that you have right now to get up there toward that area and make a run through these pivots. Same thing for the S pivots. If you're running down through S5, most likely, you're going to get a bounce, if not a reversal, a good bounce, if not a reversal. And so a lot of times what you'll see on your Bitcoin, your Ethereum, stuff like that, or even if you're playing, the stock market, if you see a sudden move on your 15-minute, the pivots on your 15-minute, those are your daily pivots. If you see a drop down through the pivot and through the S1, a strong push through that, you can probably watch that thing pull all the way through the S5 that day. And if you get a push all the way through the S5 pivot on the 15-minute time frame in the day, most likely you're going to get some sort of bounce, if not a reversal, off that day's low. So see, nobody is out there telling you guys this stuff. I've been looking for people telling this stuff. Nobody tells you this stuff. Nobody else understands it like I do. That's teaching it out here that I've been able to find at this time. Right? There could be other people out there that do. And there probably are. But I'm not able to find them. I haven't been able to find them in the last, I've been doing this TWC we've had open since 2017. So I've been doing it for 8 years publicly. And I haven't found anybody else that talks about pivots the way I do and gives you an understanding of that and shows you how they work with the other systems, that we teach to help you understand liquidity better. Okay. So again, Ethereum says, man, can we do that? Because if we do that, all of a sudden, we're looking here initially, and, again, most likely this would be 5 waves up, 3 waves back, right? And what you can look at, see that R1 pivot? Pull it back to this swing low right here. This one right here. Look at where the 50% is. 50% retracement. Right around the yearly pivot. So again, if we get that breakout through that yearly pivot, the odds are we're going to run up around this 31,435 area. Again, it could go up a bit higher, but around that area. And then we're going to look for a pullback toward that pivot area. And here's the thing. If we get this move, if we get a move that looks similar to this, right? The odds are we're going to break out and head higher. The odds are strongly in your favor that you're going to rally and break out higher. Okay? XRP. Solana. Got more stuff on here. But Solana, again, we can look here. Let me take off all this other stuff. Boom. So if you zoom out to the monthly, you can see that your pullback so far is finding support, where we had support at the wick here on June of last year, where we had candle spread support here on April and March of last year, wick support on February of last year. And we come down here and pretty much wick support right around that area here on September of 24, July of 24, June of 24. And again, right here, we've got resistance and support back here. Wick resistance, December of 23. Candle resistance, February of 24. Wick support, April of 24, May of 24, June of 24. You see what I'm saying? So this is a very, very, very significant area. Look what happens here if we keep going left. Look at what this does. It's this same resistance we had here, candle resistance, March and April of 22, wick resistance, February of 22. And if we keep going over, look at this. It was basically wick resistance of August of 21. Watch this level. Watch this area we're at, this 120 area. 110, 120 area. If this continues to hold a support here, and we break out with an impulsive weekly or monthly candle above the yearly pivot here at 160.09, and this is the Sol USDT chart on Binance, okay? So whatever chart you look at, right around that area, if you get that, local target, about 225, maybe a little bit higher, right? But again, you're looking for the rally up into that R1 pivot, a pull back to the pivot, and then you're looking for a reversal and a pull out higher, right? If we get that move, the 50% is right around 160, 165. The yearly pivot is 160. So you would expect to see 5 waves up here, 3 waves back into the pivot area, maybe a little bit above it, right around that area, and then you're looking for your next move out. Now, based on the height of this pullback, right? This is the largest pullback in this area. That would give us a pattern target. Oh, I've already got it there. That would give us a pattern target up here of 554, which takes us almost to the R4 pivot on the year, the yearly R4 pivot. All right. The other thing that's interesting about this is it looks like we've got an ABC and then an ABC. So it would be 3 waves down, W, X, Y. And since we broke out above that third wave there, right, or the second wave, that means potentially, now that's a bigger pullback, but that means potentially we could see a pattern target up here of 2188. I'm not saying it has to go there, guys, but I'm just saying what we do is we look at those pullbacks, and if they're 3 waves and we break out above that second wave, we mark that 1.618 fib retracement target, not your fib extension. Don't use your fib extension. Use your fib retracement. But I would look locally first. And this doesn't mean we hit 2188 this year or next year even, right? It just means that based on the height of this November of 21 to December of 22, so 13 months pullback, that would be the pattern target there. So you work it on the way up. You have that up there as an idea of where it may go, but you look at your shorter targets along the way and see if you can decipher what's going on with price action. It continues to go along the way. See if it continues to build toward that target. Okay? That makes sense? All right, let me jump over here real quick. I've got gold. Let's look at gold here. And gold, gold, all right. So I kind of said, I posted something not too long ago on Twitter, maybe a month ago or maybe 2 months ago, something like that, that we were likely coming up near a top of the overall cycle, right? And I've got this big drawn parabola on here, right? Suggesting maybe from the time, after we got off the gold standard, after we got off there, right? So basically from about 76 or so, 1, 2, 3, 4, and potentially looking something at 1, 2, 3, 4, 5, or it may be a 1, 2, 3, 4, 5, right? So I think we're closer to a gold top than not. Gold has never had a higher RSI than it did last month. it was higher than the previous time, which was over here in 1980, in January of 1980. It has never been, RSI has never been more overextended. So I would be careful, but this is something when I'm looking at macro, I don't necessarily like to see because it makes it a bit more difficult. And that's this idea that we are halfway between the pivot and the R1. Why don't I like that? Because when you're coming in between these pivots, it's basically, when you're halfway between these pivots, it's basically a crapshoot. And so what we look for is, if we can get a breakdown on these larger time frames, we look for a likely move down here toward the yearly pivot at 38, basically 38.50. But if we can continue to break out higher here, then that puts us looking up here at the R1 pivot at 5,075. At that 5,075 area, I look to see, are we getting rejected? Because if we do, I'm going to look back down here toward the pivot again. At least if we're still in that same year, right? If it takes us till the end of the year to get up here and then the next year's pivots come out, we'll look at what the pivots look like then. But based on the current pivot here, if we were to get a rally up into that, I would look for a rejection and likely push back down at least toward the pivot here. But again, if we're losing it here, we'd look for a move down here. Now, again, I don't like when it comes in sideways like here, because two things will happen here. One is it'll bounce, and then it could potentially break out higher, and we'd look at the R1 pivot. Or two, it'll continue to break down through that pivot, in which case we'll look down here around this 31.15 to probably 32.60 kind of area here, where we've got this monthly wick. So if we break down impulsively on the weekly or monthly below that yearly pivot, the odds are we're going to come on down here toward around 3,200. But if we can get a rejection here at the pivot at 38.50, we'll look for a rally up higher, which will increase the likelihood we'll head up here to 5,075. If we just break out here instead, 5,075, right? I'm going to try and speed this up a little bit here. So that's what I'm looking at with gold. Silver, excuse me. Again, let's take a look at silver here, right? So if we look at the history of silver, it's a little bit different, right? It's actually been higher, the RSI on the monthly. It was higher over here in February of 1980. And then it's got all these other, but it's got all these other ones, right? If you looked at gold, it'd probably be similar to here. But nonetheless, 1980, it was higher versus gold, which was higher now than it was at that high in 1980, right? Whoops. What am I doing here? Oh, there we go. Not thinking here. But silver, you know, again, we have this swing high that we broke out above, right? From 1980 there, which we did for slightly there. And was this 2009 or 11? 2011, yeah. Same time, gold kind of around the time it hit its all-time high before it pulled back, right? So, you know, if I look at this, and then you see we just pulled back to the EQ, and boom, we rallied up, pulled back to previous resistance to support, rallied up to previous resistance, pulled back, previous resistance, pulled back, and then boom, took off, right? So, based on, for instance, the height of this pullback here, that would give us a silver target eventually. Doesn't happen overnight. Up there around 123.15. That's the pattern target. Now, as I'm looking here, let me zoom in a little bit here. Again, make note of how overextended we are on the monthly RSI. Stochastic RSI, been topped out for a few months here, right? You absolutely have to pay attention to that. Let me get back to the monthly there. So macro picture says this. Says if we pull back from here, we want to see if we can hold support around this $61 level. If we break down impulsively through that with the weekly or monthly candle, the odds are high that we're going to come down here toward about 39. If we can hold support there and rally back up, we'll just say we'll do this right here. Then based on the height of that pullback, we'd look up here around $101 for our next target. If instead we kind of break out from where we're at here, well, we're going to look up here around this $94 area at the R1 pivot. Okay? We're going to look at that. Zoom into the daily here real quick. Again, daily. New monthly pivots on the daily, right? So minimally on the daily here, we do have a three wave drop. It went one, rebound on Monday, and then the drop back down, right? Or the rebound on Tuesday, I'm sorry. And then the drop back down here on Wednesday. Now we have this pivot here. I got to put these the other side. At about $70.50. If we break down impulsively with the daily candle, impulsive breakdown and close below that, generally we should overall be looking for a move down here toward about $57, $60, right around this monthly S1 pivot area. If we get that breakdown. But again, if we get the breakup, if this is 3 down, we rally up. Now, there's a couple of ways this can happen. If this was to rally higher from that swing low, let's go to higher here. We could say 3 waves down and it's done. We're looking up about 93.31. So again, toward that 94 level at the R1 pivot. Makes sense, right? I told you, based on this, if we were to break out higher, we'd be looking at that R1 pivot on the yearly. That happens to just about align with the pattern target based on the height of the pullback here. Now, there's a couple ways this could go. One, it can be done. Boom, boom. And it's just going to go up there higher, right? 2, we could be printing a triangle here, which means it has wave A, it'll do a wave B, wave C, wave D, wave E, before it breaks out, and it'll still be targeting, as long as that swing low stays there, it'll still be targeting that 93 area. 93 to 94. The other idea, because again, we're just overlapping, right? No clear, but it's the other thing it could happen is we've got 3 down. So again, in either case, we're looking for a breakout above this second wave here at 78.0654. So we could get 3 down, we can get 3 up, probably toward this 84 area. And then 5 waves back down to sweep the low here and then get the move up. And the target, as long as we just sweep this low here, the target will generally be that same 94 area. But this would be a flat correction. 3 waves down, 3 waves up, 5 waves back down, sweep the low. It's reaccumulation on the monthly pivot, and we get the breakout higher. So, if it's going to go up, it could be down here and just go up, or it could print a triangle and then go up, or it could swing out slightly higher, trap the breakout traders, come on back down, trap the breakdown traders, mess you all up in your heads, and then rally up and break out again. It's just a pattern. And so we would have to see, how does it unveil? How does price action unveil itself while we continue to watch it to see what it does? But if instead, if we go from where we're at and we continue to break down further, well, again, we've already got 1, 2, 3 waves down. So as long as this second wave here, resistance up there, the swing high at 78.0654 holds as resistance, and we break down further again, that gives us 1, 2, 3, 4, 5. So that suggests 3 waves up, just a dead cat bounce, and then at least 5 waves more lower. And so we would look initially, again, look at the monthly S1 pivot. 57.28. The yearly pivot here is at 61.23. So again, the idea that this gives us a pullback toward this 57 to 61 area. Makes a lot of sense. Makes a lot of sense. You're going to have to see how this overlapping price action takes care of itself there. Okay. Let me see here. And real quick here, I'm over, I know. Real quick here, let's talk about natural gas. Here we are looking at natural gas. So again, we're on the monthly time frame. That's our yearly pivot. Right here at $3.94. Was that 943 or so? 945? Right there. And so we're coming in sideways between it and the S1 pivot, right? So generally this tells us if it cannot break out impulsively and close with a weekly or monthly candle above this 3.943, it gets rejected anywhere between here and there in that area. We would look down here toward the yearly S1 pivot at $2.39. Okay. If we can get that impulsive breakout and close above there, then we generally look at the $5.26.5 area. Me personally, right now, I update this chart daily. The daily time frame on that for our people at the TWC Trading Academy. So our operators there in the liquidity cartography group, I'm expecting us, generally speaking, especially if that holds right there, I'm expecting that move down to 239, somewhere in this area here. On the daily time frame, look what's happening here. This is old. Let's get that out of there. Well, we can get that out of there too, whatever. Here we are. We're down between the pivot and the S1. We're well below here. We're coming into the gap. The odds are we're going to fill in this gap. This gap fills in around $3.25, which gets us pretty close to $3.10, which we have another gap down here just below that at $2.98 or so. So I think the odds are strong that we at least get down to this $3 area. And then from there, we would look and see, do we get the further continuation down toward the $2.39 area? So what could happen here is we could see maybe 5 waves down here, 3 waves up, and then 5 more waves back down toward the 239. So it gives us an A, a B, and then a C finishing down there. So for me, overall, it looks like we've got downside for natural gas, at least in the first half of this year, first quarter to half of this year at least. Again, might get a bounce, what would you call a dead cat bounce there before it continues lower. But if you're trading natural gas, that's what I would be watching. Big picture, big time frame right there. For right now, as long as we're in the month of January, as long as we're sitting below that $4.29.5 area, my bias is going to be down there toward $3 and then $2.33, whatever, around that area. Big picture, right? So that's what I'm looking at, guys. Basically, you can take this now and you can apply this to all your other charts you're looking at. Okay? You can apply it to all the other charts you're looking at and come up with these same, just look at these same general things I talked about. And that's all you have to do as far as your bigger picture goes. Doesn't matter what your chart is. Okay? And if you need to, come back, watch the video again, take in what I'm saying, understand what I'm saying, and then look for the targets. But remember, these are larger time frames. These are the monthly time frames we're looking at, generally speaking. And then you zoom into the daily and look at those monthly pivots on the daily, right? But no, you need to understand what time frame you're looking at. Don't look at the daily thinking about the 15-minute. Don't look at the 15-minute thinking about the daily. Unless you do it the way we teach at TWC. There is a way where you can look at your lower time frames, but you only do them at specific times. You might be able to tell where a reversal is coming for those larger time frames. You can, potentially see a possible bounce or reversal on a 15-minute for a daily. stuff like that. So anyway, that's what we've got there, guys. So like I said, I know I'm over here, a bit, but I got to get going. Fibbo will be back with me next Friday, so y'all be tuning in for that. Sign up at themarketbreakdown.com for my newsletter out there, the Market Breakdown. And starting today, every Friday for the next 16 weeks, Fibbo is going to have a 16-part session that you guys will have access to. And like I said, if anybody's interested, I'll probably take it down here pretty quick because it's been up a while and nobody's grabbed it. But we've got one more 50 off coupon for our annual liquidity cartography group. Learn everything I'm teaching you that I taught you today and so much more with that. Finally get an understanding of where liquidity is in the markets and why it's there. Not just where it is, but why is it there? Because once you understand why, you can start finding it on your own, right? That's the goal. So do that. 50 off, 50 OFF. Go to members.texaswestcapital.com. Click on the annual liquidity cartography group and then use that code there. First come, first serve, y'all. All right. I hope y'all are having a great start to your new year. 2026, I think, is definitely going to be interesting. But that's your basics right there, guys. That's what you need. From that, you can zoom into your smaller time frames and figure out what you're looking at. But your larger time frame levels matter the most. Okay? So if you're breaking through one of these larger time frame levels, don't think on a smaller time frame it's going to, on that larger time frame, go back the other way. Most likely it's not. All right? As always, remember the only thing you control is how much you lose. So please keep working on that risk management. Y'all have an amazing year. Keep coming back. We'd love to see you. Don't forget Beards and Bitcoin next Wednesday as well with Andrew and Tillman from Arch Public. And man, oh man, follow me, TX West Capital there on X. Thanks so much for joining in, everybody. We'll see you next Friday. Or hey, if you join us at TWC, say hello. We'd love to welcome you in and help you get going to finally understanding the whole market thing. All right. Take care, everybody.
Trading tip: always manage risk before chasing gains.